Hey there, it's Dean Odell with Seven Gables Real Estate in the Odell Group. Today is April 22nd. It's time for another Tustin Talks. Things are changing. I'll tell you, if you've been watching this show, you know I said the pendulum's starting to swing. That's what we were seeing out in the field. Well, now we are seeing it in the numbers. So let's get started with our first chart. So looking at this first chart, this is Orange County listing inventory year over year. What's interesting is we started the year at 1,080 homes and we are now at 1,732. We've gained 652 homes, which means we are up 60% on inventory. That is the largest gain we've had in inventory since 2019. So we like to kind of dissect this thing and see what's happening over shorter periods of time. This is a year over year chart, but we're seeing inventory grow for the first time in a long time. Okay, let's talk about demand. Last year, we had 3,100 homes. When we looked over the last 30 days, we said, hey, 3,100 homes have gone into escrow. Well, now we look and we say only 2,241 homes have gone into escrow. But remember, we still have less inventory to pull from than we did last year. Last year, we had another 632 homes on the market. So partial problem is inventory still. Okay, but even so, when we measure demand at 2,241, that's the lowest demand we've had since 2007, when we only had 1,910 homes. So what's interesting is supply is up and demand is down, and that is something we haven't seen for a long time. Now, what do we find when we just look at luxury demand? Now, luxury market in Orange County is defined as anything over $2 million, okay? Well, when you look at luxury demand, last year we had 310 homes that went into escrow. This year we only had 250, so we're off almost 25% in luxury demand. So that is very interesting, because the reality is since last month, the inventory's actually gone up 7%, while our demand has actually gone down 1%. Okay, now this is an interesting chart. This is Orange County pending sales year over year. Now, what's different about this chart is this is total demand, okay? So it's not just looking back 30 days, it's looking at the total demand. And that's everything that's in escrow. So right now, everything that's in escrow is 2,700 homes. Last year at this time, it was 4,000. So there you go. Demand is definitely starting to cool in Orange County. It's starting to cool all over Southern California. When we look at these figures for the luxury market, demand is down 18%. Now, demand normally peaks between the end of April to the end of May. So to have demand falling when it's normally going up is indicating that something's going on. And what do we think that is? Well, a couple of things. First of all, overpricing. People are optimistic. 15% of all the homes that are on the market have reduced their price before they've sold. That's a high number. That's like 1 out of every 7 homes is having to reduce. For a while there, nobody was having to reduce. They just put their home on the market overpriced and the market would catch up with it, okay? So what is stalling prices from going up? Well, I think you guys have guessed it, right? It's mortgage rates. We have mortgage rates absolutely exploding upwards, and we're going to talk more about that later. Now, I told you in last week that the pendulum was starting to swing, and now we're starting to see all these cracks in the market. But look, the market doesn't change overnight. It slowly happens. These are just the first signs that something's going on out there. Something's changing. But if we look at expected marketing time is also showing that it's going up, which means the market demand is going down. It's taking a little bit longer to sell a house. But you know what? We've gone from like 20 days to 23 days. Look at where we are. We're still in a hot seller's market, still less than 60 days to get a home sold, okay? So even though I'm pointing out all these discrepancies and all these little things we're seeing, the market is still a great market for the sellers. But guess what? The buyers now can finally know that it's probably not going to continue how it's been going. So let's talk about that now. Okay, guys, so I don't want you to think this is a negative Tustin Talks, because it is not a negative Tustin Talks. What it is it's validation of what we've been saying. You can't have interest rates go up and prices go up forever. It's unsustainable. So now we're finally seeing that things are changing. The pendulum is starting to swing, as I say. That said, Our team just came off the best week of the year that we've had in sales. It was crazy what was going on. So there's still a lot of activity. There's still a lot of things going on. But sellers, you can't just price your house at anything. It will not sell. All this stuff you might be reading about in the papers of different, what's going on in the market and stuff, it's probably not regional. It's probably not to your city that you're looking in. You have to look at real estate, not only on a macro, but on a micro, because every market is different. And our market is still very, very strong. But I caution you, next week, I will go over some interest rates, or I might have something in between the 2 weeks where I just show you guys the effect of what these buyers are feeling right now with interest rates going from 3.25% at the beginning of the year to about 5.25%. We're almost up 200 basis points. Do you know what that means for the average buyer? That means the average buyer now with a 20 to 25% down payment is actually paying 20 to 25% more for the house on a monthly basis. Or think of it this way, they used to be able to buy a $1 million house. Now they can only buy a $750,000 to $800,000 house. So this is what's going on in the market right now. This is what the Fed wants. They want to slow this thing down, cool it off, curb inflation. But hey, you know how many foreclosures we had in Orange County last month? In the whole county? Two houses. Okay, so don't get too excited, buyers. The only thing you got to be excited about is that right now, as long as the economy remains strong and people don't stop losing jobs, is that appreciation is not going to be what it's been the last 2 years, okay? We've probably seen most of the appreciation we're going to see all year already happen in the first 4 months of the year. So with these higher rates, just anticipate that we are going to have smooth sailing from here. Sellers, you may not get 10 offers, you may only get 2 or 3, but guess what? That is still really, really good, right? So that's it. I will talk to you guys on the next Tustin Talks. Thanks for tuning in, and give us a call, sellers. Check out our listings on our website. They're selling quickly still, and they all look good. So buyers, we'll see you soon. Talk to you later. Bye-bye.